Hi there, welcome to Kneppy Invest and welcome to November 14, 2024. There's about 1 hour and 40 minutes left of trading today. And I suppose an okay day on the markets, unless you're heavily invested in resources or mining companies, down 0.83%, tech up 0.88%. And that continues the theme we have seen since Trump got elected last week. Tech's had a rally, mining or resources have had the complete opposite. What's the opposite of a rally? Anti-rally over the past week or so. Anyway, so the agenda for today's video, and before I actually talk about the agenda for today's video, today reminded me of August Day because we had quite a few companies release the half-year or full-year results today, including companies I own, and I have included some of those companies in the top 5 stocks of the day. But before we have a look at that, we'll have a look at the best and worst performing sectors, indices, and also companies. Have a look at the top 5 stocks of the day. Then I might look at some of your comments if I have time, although I'll probably also have a look at some charts because quite a few companies who released some interesting or intriguing announcements today did not make it in the top 5. So instead of being included in the top 5, I'll have a look at some of those charts. So that includes Satire, Grain Corp, Flight Centre, Superloop, Civmec, maybe not Midway, Infotel, Orica, Medadvisor, Nufarm Pharmaceuticals, Shaver, Shop, and no, not Findy because they went into trading halt. I know. So let's get stuck into today's video. And before we have a look at the ASX today, I'm just going to have a quick, brief look at trading economics just to see what's happened with economic news today. For instance, Australia jobless rate stays at 4.1% for the third month. That's a good sign moving forward. The jobless rate is not increasing, and that is probably one of the main determinants about whether we're going to go into recession or not. If we start to see jobless rate start to really increase, that will be a fairly negative sign. Another positive sign, Australia inflation expectations 4 to 3 year low. That's a good sign. Unfortunately, on the flip side, US inflation rate picks up, and I do think there is potential that US inflation really ramps up over the next 6 months. Anyway, won't look at Couple Brief. I'll just look at Couple Brief if I want to maybe clarify some reason why a share price of a company might have moved up or down, and particularly if it's a big company, because Couple Brief won't feature any small companies. So let's have a look at the ASX today. And we've already seen that some sectors, indices up, some are down, particularly resources. So let's have a look at the best and worst performing sectors today. In fact, tech started off really well today, pulled back and has rallied again. Interesting. So IT up a fair bit, 1.62%. Financials, utilities, discretionary real estate all have had a really good day. So a fairly bifurcated market today because energy, industrial, staples, healthcare, and materials are down. Particularly healthcare and materials down big by over 0.5%. Now, if you have a look at the indices, banks have had a good day. Not sure why. That is always intriguing, why something that is significantly overvalued can keep on rallying. But again, the market can remain irrational for a long time. And gold has not had a good day. In fact, I have taken profits with one of my gold companies, Auric Mining. I bought at 17 cents and sold at 27 cents today. And if gold keeps dropping, I'll sell out of my remaining positions over the next week or so. Let's have a look at the ASX 20 just to see what's happened among the biggest companies on the ASX. I expect a pretty good day led mostly by the banks. So let's say 12 companies up, 8 down. Ooh, 11 up and 9 down. You might be saying or thinking, why is it fairly equal between those companies up and down? What I'd say more than likely is because the banks have had a really good day and the banks are among the biggest companies on the ASX. So if the biggest companies in a particular index have a good day, that will prop up that index. So if you just rank this by market cap, you'll probably see, there it is, CBA up 1.41%. NAB, Westpac, and ANZ all up by about 1%. Not sure what's causing this rally in banks. It is ridiculous. In fact, CBA probably has a price or P ratio of maybe 28, price to book of maybe 3.3. It is the most expensive CBA has been in a long, long time, if not ever, yet they're not growing. BHP, CSL are down, which makes sense. BHP, mining, CSL, healthcare, but you can see the majority of the biggest companies are up, while the majority of the smallest companies are down. Hence, why the ASX 20 is up, yet 11 companies are up, 9 are down. Okay, let's have a look at the best and worst performing companies today. Top gainers we'll start off with. And straight away, not surprising to see Midway. There is a takeover bid for that company. So I'll just move on. Share price up 60.8%. I don't know why anyone would want to take over that company. I'm going to be completely honest with you. I don't know. This is not the sort of company you want to own at all. That's just my opinion. And just to back that up, let's have a look at the weekly chart for Midway. And it's just done nothing. Done nothing since it listed. It's gone sideways. I wouldn't say there's good value. They might have a reason. I don't know. Midway Limited up a fair bit today because of a takeover bid. Streamplay Studio, not really a company I have looked at in the past. Share price up a fair bit today, but it is on a low base. Share price 1.1 cents. Other than that, nothing else of note here. There was another takeover bid for Self-Wealth. So takeover bid war for this company. So Self-Wealth there was a bid for Self-Wealth, was it yesterday? Yesterday from Bell Financial Group. And another one from a company called Axie Corp Financial Services. And that's why the share price of Self-Wealth is up. And one of the best things to happen to any shareholders is when there is a significant bidding war for your company. Although on the flip side, that probably means the company is undervalued and maybe the management is selling the company for cheap or much cheaper than it probably should be. That's just my opinion. Anyway, Mesoblast up for no reason. I actually did have a look at that. Medadvisor, we'll have a look at Medadvisor's chart towards the end of the video because they did release an announcement in regards to a strategic review and the market seems to like that. They also mentioned they believe the company is undervalued. I'm not sure. $162.6 million for that company. Yeah, I'm not sure whether it is undervalued. And that's about it when it comes to percentage change today. Let's have a look by market cap, see if there's any interesting companies here. Xero released their results today. I will talk about that company. And Nufarm Pharmaceuticals, they're doing a share buyback. I'll have a look at the chart for that company today. So market likes a share buyback. I think it's a $50 million share buyback. Nuix has had a nice bounce. In fact, I might have a look at the chart for that one. I'm not surprised it's had a nice bounce. I was a little bit, wouldn't say confused why share price was down. Was it 20% yesterday? It was confusing. I'm not sure. I still don't know. It wasn't that bad. And so I'm not surprised to see the share price rally today. Nufarm, another company I'll be discussing in the top 5 stocks. They also released results. Share price up 7.24%. And then Catapult also released results today. Share price up 8.75%. So Nufarm, Catapult, and Xero all release results that the market liked and all are featured in my top 5. After that, happened Weebit Nano. Nothing really there. There's Medadvisor again. Okay, so let's have a look at the top losers today. Let's see if there's any big surprises here. I do expect one company to be in the top losers. And there it is, in at number 3, Straker, down 22%. And they did release either a trading update or AGM, and that is also in my top 5 stocks of the day. Other than that, Dubber, I'm not sure if they released anything. I don't think so. I don't remember. Let's have a look. No, they haven't released anything of significance yesterday, just a bit of volatility with the shares of that company or the trading of that company. And the rest here, yeah, there's nothing much really happening. Clearview Technologies, I have a feeling they released something the other day. Or was it today? Selling something in Australia. No, UK. And that was yesterday. Clearview signs MyGlass Projects as first UK licensee. So share price might have lifted up. Yeah, 7.4% up yesterday. Down 10.34% today. So maybe I shall have a look at the chart. Actually, I'll have a look at the chart for that company now. I would expect or assume the share price is in a downtrend. Yeah, okay. Oh, that's a weekly chart. Yeah, the share price is a downtrend. So good news yesterday didn't last very long. So this is the sort of situation where I would not buy into a company because there's just too much negative sentiment. And even if the company releases something positive, as we've seen over the last 2 days, it doesn't mean the share price is going to rally. And also, I'd love to see higher volume. We did see the really big volume coming in yesterday. That showed me that there isn't much strength to the announcement. Okay, so what else do we have here? Nothing else. So let's have a look by market cap. Catalyst Metals, gold, Satire did have the AGM today. I'm just going to have a look to see if the company have released anything lately, down at 7.1%. This could be my top 5 stocks of the day. I'll talk about Satire when we do the chart portion of the video because, yes, they did do or release their AGM chair and CEO addresses and presentation. I assume something negative has been released. Share price down a fair bit. But we'll have a look at the chart towards the end of the video. What else do we have here? Gold companies. AFT Pharmaceuticals is usually on low volume, so it's just a bit of liquidity issues. I have silver companies, uranium, silver, and nothing else to really discuss. Okay, so let's get to the top 5 stocks of the day, and I'm moving fairly quickly, so this is really good. Notice resources is now down a fair bit, 1.1%. Okay, so coming in at number 6, or number 5, not 6, is Cosol. This is a company I own, and I probably should have traded it because the share price had moved into downtrend, and yeah, and I thought this company would be releasing some negative news. That's what the market was saying. This company is going to release something negative. And today they had the AGM. Not only that, they released a business update, first half guidance, and AGM address. So I actually expected this to be quite negative. I'll be honest with you. I expected their trading update to be negative because I thought the market was seeing something negative happening. And we'll have a look at the chart to understand why I was thinking that. So Cosol confirms strong half-year 1 revenue and earnings growth. Financial year 24 momentum carries through to financial year 25. Really good growth, revenue growth of 17 to 20% over the first half. And so it should be in the range between 57.5 million 58.4 million. First half underlying EBITDA growth expected to be between 17 and 25%, with underlying EBITDA margin for the first half to be in the range of 14.1 to 14.7%. They also mentioned here seasonally our first half EBITDA margin is lower than the overall year, so an expansion in their margins. The chairman's talked about how they're pleased with the momentum of the company. So it all seems pretty good, this company. The only negative thing about Cosol is the chart. So let's have a look at the chart. And remember, as what I said before, if a company does release something positive, just because it doesn't mean the share price is going to take off. Because if the share price is in a downtrend, there's a lot of negative sentiment behind the company and there will be resistance. And that's what we're seeing with Cosol. Okay, so share price was in a nice uptrend, sort of turned negative on no reason at all. This can happen. Share price rallied to $1.32, and that was a peak. And the share price moved into a short-term downtrend. There's a nice little level at about 19.91 cents. If it does fall through that, that would be a really negative move. Now, I'm positive now that maybe the share price won't go much lower than that, but you just don't know with the market because share price has in a downtrend. And we haven't seen much reaction from this particular announcement, even though it is positive. Things are still moving in the right direction for this company. But again, it's the negative sentiment, the short-term negative sentiment. So this share price of this company can go either way. Maybe just go sideways. We need to flush out all those shareholders who bought at higher prices. They need to go. And it could take a while. Just don't know. And then until that happens, I think the share price of this company will struggle because we haven't really seen the share price pop up on today's news. But I was thinking of selling this, and I'm just going to hold on for a while now. So share price is at the exact same share price I bought. There you go. Anyway, so that's Cosol coming in at number 5. Not as disappointing as an AGM as I expected. I expected maybe some downgrades, maybe some disappointing trading update, that sort of thing. It just doesn't happen. So I think that's a good sign that maybe the market has overreacted. Maybe this short-term negative sentiment in the company is not really justified. Now, coming in number 4, we have the only negative announcement of the day. That is Straker Limited, a fairly small company. Share price down 14.74%. It was down by a significant greater amount than that. In fact, it would have been down by probably almost 20% at one point today. So they did release a financial year 25 financial outlook. Another sort of announcement I do like. This is the sort of announcement where we get to sort of like a trading update. Very similar than trading update, if not a trading update. We get to see how the company is performing, and this was not good. So Straker is a sort of a language. So it's a interpret, not language. What do you call it? It's a language company, but they say they provide next generation language services supported by state of the art technology stack and robust. Yeah, just goes on and on. I don't need to know all that. So it's a language. Yeah, that's what I call it. A language company. Anyway, it was wasn't completely spun out of Ballador Technology, but they did have a fairly big stake in the company, and the share price and the chart is under pressure. Now, let's have a look at this particular announcement and why the share price is down a fair bit. So, company expects to report revenue within the range of 43 to 45 million, compared to $50 million last year. That's a really big red flag. That revenue has dropped significantly. And revenue of 22.7 million in the first half of financial year 25. So no bounce in the second half of this year. They also gave a reason why revenue has dropped. The decline in revenue is primarily being driven by the IDEST business in Europe, impacted by the non-renewal of 2 low-margin contracts with European Union institutions. They expect gross margins to remain at least 63.8%. And they continue to be expect to be adjusted EBITDA positive. Adjusted EBITDA positive. Why not just EBITDA positive? Why not profitable? That sort of thing. So many companies just use EBITDA. However, if revenue trends towards the lower end of guidance, we anticipate operating cash flow may drop slightly below break even due to our commitment to a well-funded go-to-market strategy of our next product line. So the market hasn't liked this, and I can understand why. And the other thing, chart looks horrendous. And here's the chart. In fact, the share price has been a downtrend since 2021. We're talking about a 3-year downtrend. And back then, when the share price moved into a downtrend, let's go back here. So the share price was in an uptrend, and it sort of moved into a downtrend probably September, October 2021. Share price at that point was $1.75. And then it's been a downtrend ever since. And hasn't really been any period during this downtrend where I've thought, oh, this is starting to look interesting. Not one single time. Even back in November 2022, share price did get above both the moving average channels, but there wasn't much strength to that movement. Now, the share price has been sort of going sideways, but just drifting lower. And this sort of announcement won't help that drift lower. So I wouldn't be surprised to see the share price drop even further from here. So Straker Limited, I wonder if Ballador Technologies has dropped as well, because they still hold a fair few shares. Yep, down a little bit. And that's probably why. Okay, coming in at number 3. Now, that's the only negative one. Straker is only negative. Now we need to look at 3 positive financial results. We'll start off with Nufarm. And probably the only reason this is coming at number 3 instead of number 1 or number 2 is because the chart. So I'm not liking the chart for Nufarm. Share price up 6.56%. It was up a little bit more than this. I'm pretty sure the share price at one point was up about 9%. I can see the high, $4.10. And they released their full-year results. Now, the numbers themselves don't look that impressive. But the most important thing here is they beat expectations. The reason I know that is because I saw it in an email, I think. I'm pretty sure I saw it in an email. Nufarm beat expectations. That's why the share price was up. And I'm wondering if Capital Brief says the same thing here. If they release, there we go. Nufarm shares surge as full-year result beat expectations. That's all you need to see. Beat expectations. So it's not the numbers, it's how do the numbers compare to expectations. So if you just look at the numbers and not understand the expectations, then you might say, oh, this is pretty negative. So underlying EBITDA, 313 million at the midpoint of guidance. Statutory net loss of after tax of 6 million. Oh, they're loss making. Ugh. Net debt 25% below prior period or prior year. And that's about it. But yeah, EBITDA of 294. Here he is. Crop protection delivered underlying EBITDA of 294. Last year was 415. EBIT of 137 million. Last year was 273. So significant drop in EBITDA and EBIT for crop protection. Seed Technologies, EBITDA drop of about 15 million there from 98 to 83 million. So significant drop in Seed Technologies, EBITDA and outlook. We are seeing solid end-use demand and stable active ingredients prices for crop protection. As a result, we do not expect to see the same deflationary impact from falling active ingredient prices that we saw in financial year 24. There has been recent downward pressure on fish oil pricing. What else do they have here? Although we are seeing strong performance from MPIs and volumes, achieving the financial year 26 revenue aspirations will be largely dependent on a return to long-term average pricing in crop protection. My biggest problem with this sort of company is I don't think the management have as much control over the financial performance of the company than you'd like to see. So they're more of a price taker than a price maker. And those sort of companies I would never classify as high quality. They're lower quality because of that very thing. And some years you just don't know what's going to happen. Something bad could happen to this company that is completely out of control of the management of the team, and the share price will suffer. Anyway, so that's Nufarm coming in at number 3. So the reason it's coming in number 3 instead of 1 or 2 is the chart. Not really the best looking chart. So I thought maybe this could be a breakout. Then I had a look at the chart and I went, oh, actually that's a wrong chart. That's Nufarm on German exchange. We want to look at Nufarm on the ASX. Here we go. So share price has been a downtrend for about 6 months. So since April, May, we'll say. It did look positive, the chart, late last year into early this year, but that positiveness came to an end fairly quickly and the share price has been suffering. The company has released a couple of negative announcements. The first one was in May and the second one was in August, so that would have been their results, and the share price keeps on dropping. Now, I do have this purple box. So this is a support box. And the share price of Nufarm is in that box. So that's a sort of a support area. I could be interested in taking a position in this company just because it's in the box. And if it falls below that box, that will be really negative. And the share price below the box is about $3.50. Now, this box has been in place since 2019, so 5 years. So if it does fall below that bottom of that box, that would be at least a 5-year low, more than likely a longer low than that. But if you do go back to the daily chart, no interest in this company at all. Even though the company has released something positive today, we have seen some selling. And you can just see that in the one-day candlestick. In fact, share price was higher than this only 4 trading days ago. Yeah, 4 trading days ago, share price was high. So we're not at a long-term high, not a 3-month high at least. I would prefer a 6-month high. Share price is not an uptrend. No reason to buy Nufarm at these levels just yet, unless you think there might be some value and unless you think, well, it's in a support zone right now, which could prop up the share price. Okay, so let's just have a look at the 1-minute chart. I just want to see when the selling came in. And fun enough, we had buying coming in. Share price went all the way to the top of the trading channel and then fell away. It's starting to fall away since then. So the high in the share price was around about 10:13 a.m. So it's about 1 hour and 15 minutes where there was some positive momentum behind the share price. And since then, it's died away. And also during the upwards trend in the share price, that's where we saw some really good volume coming in. And since the share price has started to slip lower, the volume has really come out. So that's what you see sometimes. The volume, the rise in volume can lift the share price. And then when the volume dries up, no more buying. Now, the 37 buyers have gone away. The share price starts to slip lower. Anyway, so it's a Nufarm. Okay, so coming in at number 2, this is a bit of a fight here. I wasn't sure which to put at number 1 and number 2. Now, mind you, I own both of these companies, but for different reasons. I'm trading one company and I have the other company as a longer term hold. So I did put Catapult at number 2 just because it's not profitable just yet. Not profitable. But the market likes it. The chart is really good. This is one of my favorite charts, in fact. Share price up 7.6%. In fact, probably share price is higher than Xero. Yeah. So maybe Catapult should be at number 1 just because the share price is higher. Okay. Now, this is a global. Actually, both these companies are global. I've heard Catapult being mentioned. Actually, I might have heard both these companies being mentioned on international podcasts. A sporting podcast for Catapult. And I can't remember where I heard Xero, but definitely I have heard Xero being mentioned overseas. So Catapult is a global company. They do have pretty good addressable market, but they have had troubles over the past, say, 5 to 10 years about expanding maybe a little bit too rapidly in terms of diversifying their product range. Anyway, so let's have a look at their first half results via the media release. Now, they won't mention profit here at all. So they talk about ACV, or analyzed contract value, which was a nice increase, 20% up. Revenue increased 19% constant currency, up to $85 million. And profit margin on the incremental revenue generated reached 75% year on year, delivering free cash flow of $5 million US dollars, so 7 million Australian dollars. So you notice there's no mention of profit there. And there's a reason why they didn't mention profit, because they're not profitable. So in fact, I want to see if they actually do mention profitability. Yeah, they do. Profitability and cash flow towards the end. And let's see where they mention profitability. It's just talking about revenue, recurring revenue, revenue growth, EBITDA. They're not talking about revenue or profit just yet. In fact, they don't really talk about profit at all. Here we go. This enabled the company to generate a management EBITDA Catapult measure of profitability of 6.2 million. What's management EBITDA? I've never heard that before. So is this the company's own management EBITDA? Management EBITDA means for any period an amount equal to the aggregate sum of revenues for such a period earned by the parent and its subsidiaries from the private capital management business. I've never heard the term management EBITDA before. Anyway, that's interesting in itself, but the company's not profitable. And the reason I know that is because I actually had a look at the half-year statutory accounts, and the company's not profitable. They're cash flow positive, operating cash flow and free cash flow positive, but they do have a fairly high depreciation and amortization. So let's have a look at some of their numbers. Where is it? There it is. Here is the profit and loss statement. So they had a loss of $7.447 million for their year. They also spent $5 million in employee share-based payment expense. That's a classic American company thing to do. Give your employees a lot of share-based payments. Classic American thing to do. Not sure if I'm a big fan of that. Well, I'm definitely not a big fan of that, but that's a big expense for this company, $5 million. So they do spend a fair bit of money on employees, $22.7 million, which is a fair bit of money, to be honest with you, for this type of company. Not sure where it's all going to. But if you have a look at the cash flow statement, I do like this one. So operating cash flow positive by $20.25 million. Payments for property, plant, and equipment, $7.4 million. Payment for intangibles, $8 million. So $15 million on capital expenditure and intangibles. I think intangibles is just capitalized research and development. So they were free cash flow positive. Yeah, they definitely were free cash flow positive. And anyway, so let's go back to the chart. Why is this not at 3? Why is it at 2? Why does it get a higher ranking than Nufarm? It's just the chart. This is an absolutely brilliant chart. So you just see the share price just going up, like in step-like fashion. Share price rallies, go sideways, rallies, go sideways, rallies, go sideways. You just see this happening all the time. Not only that, share price is now at a long-term high. And when I say long-term high, the last time share price was at these levels, $2.80, was many, many years ago. We're talking about 7 years ago. So pretty nice chart for Catapult. No complaints from me. I am trading this one, bought it $1.79. I originally bought it $1, and then I got bored. Dumb mistake, a rookie mistake, getting bored. And then I sold $1. I bought $1, sold $1.20, bought back in $1.79. So don't be afraid to buy back in if you realize you're making a mistake. It's one of the best strengths to have is understand you can make mistakes and then rectify it. If you just ignore your mistakes, I actually know some people who do this. They make a mistake, they sell a company too quick or something like that or something similar, and they just refuse to buy back in. sort of like if I don't buy back in, then my mistake just goes away. I'm not reminded of my mistake. But as you can see here with Catapult, and this happened to quite a few of my mistakes, I've bought back in and it's been highly successful. Share price up about 80, maybe 70%. Try and do quick maths. 70% or something like that since June. That's not a long time, since June. And this chart does look pretty good. Okay, so that's Catapult coming in as number 2. Now, the stock of the day is Xero. Now, Xero is a much bigger company than Catapult. Share price up 6%. This chart of this company also looks absolutely spectacular. They released their financial year results, so not half-year results. Let's just have a look at their media release. In fact, I haven't even looked at this company's presentation just yet. Now, instead of me trading Xero like Catapult, I'm owning this for the longer term. I think the runway growth for this company is long, really, really long. And the reason I think it's long is I first started hearing about this company back in 2014, and then in 2016 I did hear I think it was a worker, like a what do you call him? Someone who comes to your house and fixes something. What do they fix? Yeah, won't tell you what they fix, but they fixed something, and they just mentioned Xero in passing. It was just in passing, and I went, oh, okay. So I actually did trade this at one point in 2014-15, and I just wish I bought back in there and just held it for the long term. Okay, so the main thing about Xero is revenue growth, profitability. They have reached profitability, and the revenue growth and the profitable growth, or the profit growth, is amazing. Also, first half, financial year 25, rule of 40. So do they mention that? So if you don't know what rule of 40 is, I always have to Google this because I'm not sure the definition. It's something to do with margin and has to be greater than 40. So revenue growth and EBITDA margin has to be 40%. So 20% revenue growth, 20% EBITDA margin, 40%. So that's sort of one of those financial metrics for SaaS companies that is looked at. I don't look at it all that often. So actually do mention here, this is AI overview. The rule of 40 is a rule of thumb, not a universal law. Yeah, of course that's true because this is mostly for SaaS companies. So they do mention here rule of 40, but they don't say what it is. Just first half, financial year 25, rule of 40. Anyway, I didn't really look at any commentary here. I just went to the numbers. Operating revenue up 25%. Net subscriber additions. No, EBITDA up 51%. Adjusted EBITDA up 52%. Operating income up 162%. Net profit after tax up 76% to almost $100 million. And free cash flow up 96% to $209 million. And there's rule of 40, up from 33.6% to 43.9%. Gross margins of 88.9%. So things are still moving in the absolute right direction for this company. Now, if you listen to Business Core and you get Howard Coleman coming on, he just, in the past, he's just said that this company is not profitable. They always go back to the shareholders to get more money, that sort of thing. He always say the same things about these sort of companies, but this company is the sort of company I like. They are growing at a really quick rate now. You have to pay a premium for Xero because this is or has the potential to be an ultra high quality company in the future. So they do spend a lot of money, if I remember correctly, a lot of money on marketing. In fact, we'll have a look at their interim report. They do spend a lot of money on marketing. What's the other one? Research and development as well. So we'll have a look at their financial statements, a very quick look, because I had a quick look. Oh, is that I think I went straight past it. Here it is. Our performance. Yeah, here we go. So gross profit, almost cost of revenue. The gross profit is pretty extreme. It's pretty high. That's exactly what I look for. Really high gross profit. So then they can make decisions in regards to how much money we're going to spend on sales and marketing, product design and development, and general and administration. So $318 million just on sales and marketing, $286 million on product design and development. This company could be significantly more profitable if they scale those back a little bit. but they're not. They want to grow for the future, and they're also profitable. That's the most exciting thing. This company is now profitable, and they're creating a fair bit of cash in their operations. Let's have a look at the cash flow. $358 million in cash flow, $208 million in free cash flow. So definitely this company is on the move. Now, you do have to pay a premium. So if you just have a look at the profit, what was the profit again? So we'll say $100 million. This company has a market cap of probably, was it $15 billion? $26 billion. So you do have to pay for it. This company has a PE ratio that is quite extreme, but the reason it's extreme is because of the growth. If they stop growing, then this company would be ridiculously overvalued. So let's have a look at the chart for Xero. Another really good chart. Another, I wouldn't say favorite chart of mine. This is a beautiful login chart now. Okay, so I can't remember when I bought in. Do I have it here? No. So I bought in during this dip in 2022. I can't remember what price I bought. I should have a look. I should put it in here. And the main reason I bought is I thought that the dip in the share price, as many tech companies in the world had back then, I started buying American tech companies during that dip, the interest rate dip, and I also bought Xero during that interest rate dip. Share price on occasion has dropped. We saw that because of disappointing results. In fact, last year, when this company released their results on the 9th of November, share price on that day dropped 12%. So it did slightly disappoint the market, but that was a low. Share price went sideways for the next 2 weeks and then went back into an uptrend. You could have bought Xero on that day for $100, now $170. So share price has increased 70% from that period. But a nice looking chart. I do have my sell price for this company, $136. It's well above that, 170. So if we do see some weakness in the overall market, I wouldn't be surprised to see the share price fall back to that level. But all systems go for Xero. Not only that, share price rallied before they released the results. So the market was expecting some good results, and I think this company delivered. I think this company did deliver. Okay, let's have a look at some charts of companies that did not make it into top 5 stocks of the day. Infratil also released their results. Didn't have a look at this one. Charts, yeah, share price up slightly. This is another chart that looks really good. This is not a company I own, and I'm like, why don't I own this company for long term? They're doing things I like, but sort of like infrastructure companies, data centers, that sort of thing, are getting heavily involved in data centers, but they're also energy and all that rub. Anyway, so Infratrail released their results today. Orica also released their results today. Now, last time I looked, the share price was down, and it's still down. Now, this is a case where the chart looked pretty good from late last year into the middle of this year. Nice little uptrend in the share price, but the share price has been going sideways since then. But there is a bit of a sign that maybe the share price is getting into, or possibly moving into, a downtrend. Now, it could be going sideways again, but today the share price did get to about an 8-month low at one point. So the chart for this company is looking a little bit weaker than it has for a while, but I was trading this and then I got out because share price has moved into a sort of a consolidation period. What else? Medadvisor, strategic review for this company. The market has liked it. Now, the share price suffered not that long ago. The 31st of October, share price dropped 33% when the company released their quarterly results. Wasn't that good. And the company says today that the company, they believe the market is not appreciating the company and they are undervalued. So they've decided to do a strategic review to eke out more shareholder value, or something like that. And the market likes it. Share price up 14%. But yeah, I have no interest in this chart right now because of that. Well, even before that, share price had moved into a downtrend. Now, the other thing to note about Medadvisor is they are seasonal. So this company, when you have a look at their Appendix 4Cs, there's a lot of seasonality there, and they always have a really good December quarter. So there's a chance that this could be the bottom or near the bottom, and the share price might start to rally just ahead of their quarterly results that will be released in January. So keep that in mind. You can see the share price last January popped up about 29%. I'm not sure if that's the day they released their Appendix 4C, 8th of January. Let's just see. 8th of January last year. No, it didn't. They actually released their quarterly report on the 30th of January. I'm not sure what caused that share price to rally on the 8th of January. Not sure. There's no news flow. Anyway, something must have happened, sure. Although there's no volume. Anyway, and just to clarify, or just to confirm that the December quarter usually is really good. They were not operating cash flow and free cash flow positive in the last quarter. But if you have a look at the last December quarter, look at this cash flow. It's really good. Really, really good. So $42 million in receipts and operating cash flow positive, $15.2 million. Just imagine if they can replicate that sort of cash flow in 4 quarters. This company would be one of the cheapest companies in history of the ASX, because I'm pretty sure they have a markup of 160 million, which would mean they're trading on 2.5 times operating cash flow, which would mean this company is really cheap, even free cash flow, like 2.5 times free cash flow. But understand, again, this company's receipts are seasonal. December quarter is the best quarter. And I fully expect another really good quarter for Medadvisor. And I've been thinking maybe I should buy on this dip in anticipation of really good results. Anyway, let's move on to the next one. Already talked about Cosol. Midway have had, don't really need to look at this. In fact, I won't. CivMac announced, they announced a contract, but there was a little bit of negativity in there. CivMac announced a contract. That's why the share price is down a little bit. So shiploader project award and financial year 25 outlook wasn't that negative, but there was a hint of negativity in there. So where was it? Yeah. So financial year 25 outlook, whilst, which is not a good way to start a sentence. When I say that, I mean it's not positive, because you're saying, well, we're going to say something positive to begin with, but you have to understand that the rest of the sentence is not going to be positive. Whilst CivMac's tendering activities remain at historically high levels across all of its business segments, delays to the timing of key project awards from first half financial year 25 into second half of financial year 25 are expected to result in lower levels of activity for CivMac during the third quarter and potentially also fourth quarter. And that's why the share price is down slightly. Not an end to the uptrend, however, still in an uptrend, but I'm less keen on this company. You can see a really good increase in volume over the last 3 or 4 months. So that does fill me with promise, but today was not exactly what I was looking for in terms of this type of announcement, particularly because I am trading it. Trading CivMac. Superloop had the AGM, also released a trading update. Not much of a reaction from the market. Share price up 1.33%. And nothing to dislike about this particular chart. Another company I'm trading, Superloop, and pretty good chart. And I had no complaints about their update. Things are still moving in the right direction for the company. Flight Centre also released, or had their AGM, and I think they also released a trading update. It was sort of neutral. I do expect a slight reaction from the market, a pretty good reaction from the market, up 4.45%. Share price fell a lot not that long ago, and this might be considered a bit of a bounce. But yeah, not the chart for me, this one, at all. So that's Flight Centre. Grain Corp released their results. And share price down 3.5%. Now, the share price of Grain Corp did not have a look at these results. I'm pretty sure they were pretty negative. The numbers were pretty negative. Let's have a look. We'll have a look at the media release. There we go. So the numbers were pretty bad. So almost a 50% decrease in EBITDA. Well, profit went from 250 million to 77 million. Underlying profit, net profit went from 250 to 62 million. Core cash decreased 12 million, and they also decreased their dividend. The CEO said they responded well to challenging global market conditions and variable crop production across the ecosystem of Australia. So this is another company where I would not hold for the long term, because they have no control how they perform. Well, there's not as much control as what you would like. So grain production can be really affected by the weather, and even little things like maybe a bug that we don't know about could destroy crops, all their crops. Little things like that. Anyway, back to the chart. Share price was in a nice little uptrend. Is this a buy the dip situation? I don't know. If you look at the weekly chart, this should also tell you many things. Well, share price actually been a nice uptrend since 2020. Share price has gone from 350 to 850. But if you go back further, yeah, you can see share price did nothing for about 20 years. Okay, and finally, Satire. I actually have not had a look at this one because they've released their announcement at about 1:30 p.m. But share price is down 8.8%. Now, there's no way I would even think about trading this just now. There's absolutely no way. I could imagine share price falling significantly further from here. I could see it falling below $1. Also can see it rising to, say, $3, maybe going back into an uptrend. I just have no idea which way the share price is going to go from here for Satire, so I'm staying out of this one completely. Okay, I might just touch upon a few of your comments. Let's have a look. Dixie says, XRP is trash. Brainwash boomer coins, the founders own most supply and just sell on everyone since released. Thank you. I have no idea what XRP is. I just care about Bitcoin, to be honest with you. Sensei, it is, says, I should consider on the second last day or last day of every calendar month, show us the audience your top 20 current holdings and show the stock code and company name, and also show what percentage of your portfolio each of its weighting is, like an Excel table screenshot. I will think about this. So that's all I'm going to do is think about it. I think it should be fairly easy to do because I have a feeling my top 20 doesn't change all that much because most of my trades aren't in my top 20. A few are, like Gentrack is, a few others that have run up a fair bit are, but most of my holdings in my top 20 are companies I've held for the long term and can hope to continue to hold for the longer term as well. And many American companies are in my top 20. And you can also look at my Kneppy's top 20 holdings, and it doesn't change much from that. So I'm not sure doing this every month would be beneficial because it won't change all that much. So I haven't thought about it. I haven't thought about it just yet, but I'm not sure which way I'll go. AU750 says, how about FCL? Is that Fineos? Fineos. It is Fineos. How about Fineos? First thing I'm going to do is have a look at the most recent Appendix 4C. Share price up nicely, 3.53% today. And the reason I'm going to have a look at the Appendix 4C is because this is an insurance. This company has something to do with insurance, and they're based out of Ireland. I can't tell you exactly what they do, but definitely based out of Ireland. Do they have an about section? They do not. Do they say what they do here? Okay, a leading provider of core systems for life, accident, and health insurance. Carriers globally. Okay, so life or core systems for life, accident, and health insurance. I'm almost certain they are based out of Ireland. Yes, their home business or their corporate business or their whatever you want to call it is in Dublin. There you go. Not sure why they're listed on the ASX. Anyway, so if you have a look at the most recent Appendix 4C, you'll notice that they are operating cash flow positive for the quarter and also for the first 9 months of the year. In fact, 22.9 million for that first 9 months. I wonder if there's any seasonality here because the cash flow or the operating cash flow in this particular quarter was significantly lower than the previous 2 quarters. Now, the other thing to look at for this company is intellectual property. So this is the main thing here. So intellectual property is sort of like maybe sort of is not the right word. It is, I'm pretty sure it is capitalized research and development. So $21.1 million for the year to date, $6.8 million for this particular quarter. So the company was not free cash flow positive. And the thing is, this company does have a large or high market cap. I'm pretty sure it's near $1 billion. Oh, a little bit off, 588 million. So there is a lot of, I suppose, promise potential already priced in this company. So the last thing I just want to have a look at is the chart. Ooh, look at that. So this is probably why it was mentioned yesterday. The share price yesterday for Fineos rose 28.3%. all they did yesterday was have or release an investor presentation. That's why it wasn't mentioned, because they just had an investor presentation. Share price just rose on nothing. Some good volume coming through. This is not necessarily a breakout. Share price is still in a downtrend. If you sort of connect the highs, you could almost see this could be a breakout. But I need a little bit more confirmation. But interesting a few days for Fineos Corporation. So definitely potential. The downtrend is coming to an end. Fineos, thank you for that. Thank you, Sensei. 360 buy. So you're saying Life 360 is a buy. One of the things I should do now is have a look at some of the companies that fell a lot yesterday. So Life 360 was one. I think there's a chance it might bounce. It's up 1%, but definitely, I think there was just a bit of selling yesterday, and that's it. I wouldn't be surprised to see the share price go higher from here. And the other one, so I don't know, I can't say or recommend any company as a buy. I could tell you that Bitcoin's a buy. I can say right now, I think Bitcoin's a buy. I think Ethereum's a buy. I could say property is a buy right now. You should buy in these certain suburbs. That is not regulated, which is absolutely ridiculous. But I can't say this company's a buy. The fact that there's different rules for different asset classes is absolutely stupid. Anyway, particularly when it comes to crypto, I could actually turn this video series in just a crypto series and no one will come after me, because I can do that. Anyway, so I can't say whether Life 360 is a buy. It's up to you. Now, beware that I do own and trade this company at current time. The other one was Nuix. This one is interesting because I think the market did overreact. So let's have a look to see. And the share price has responded. It's up 10% today. And this just confirms, I think the market overreacted. I'm not sure why there's a large sell-off. It could have been just one institution selling, just dumping on market. But yeah, this is a nice little rally for Nuix after the negative day yesterday. What else was down yesterday? Nuix. What about EGL? Let's have a look at EGL. Oh, it is down a little bit more. This is not as positive, and yeah, this chart looks ugly. I wouldn't have been surprised to see a little bit of a bounce, but eek. Okay, let's go back to your comments. So again, I can't say, unfortunately, Fa Ding Dong, whether 360 is buy. It's up to you. And the next comment is your Freeman. And that was 4 days ago. Okay, so that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.